Hello, everyone, and welcome to Momentum Channel. Today, we're going to be talking about two high quality dividend stocks that are considered to be undervalued and are perfect for dividend investors. The first one is no other than Cummins, available with ticker symbol CMI. It's a fast dividend grower in an industrial sector. It last increased its dividend by 8.3% back in July of 2022 and currently has a dividend yield of 2.73%. Cummins has a market cap of $32.5 billion, making it a large cap size business. From a stock volatility perspective, the stock of CMI has a beta score of 0.81, which suggests average levels of volatility. Beta is a measure of volatility, and a beta of 1 suggests volatility is equal to that of the overall stock market. As for Cummins, they design, manufacture, distribute, and service diesel and natural gas engines, electric and hybrid powertrains, and related components worldwide. This business was founded back to this business was founded back in 1919 and is headquartered in Columbus, Indiana. Looking at the dividend key metrics for Cummins, they do currently have a payout ratio of 38%, but their forward payout ratio is only at 31%, which, again, although it may be edging higher for heavy equipment makers, it's considered to be relatively low overall compared to many businesses, and giving them room to continue to pay their dividends for years to come. In terms of their dividend payment history and their dividend growth over the last 5 years, Cummins has been increasing its dividend by an average of 7% per year. And in the past 20 years, they have been increasing their dividend annualized by 16%, which suggests a very fast dividend growth. They do have a history of dividend payment uninterrupted for the past 29 years. And in the past 16 years of those, they've increased their dividend year after year. From a total dividend payment perspective, Cummins has an annual payout of $6.28. Cummins does pay its dividend on a quarterly basis, and their dividends are paid in the months of March, June, September, and December. Looking at the timeliness of this stock, their current dividend yield is in line with their own 5-year average. And as for their forward price to earnings ratio, PE ratio, it's currently at 11.5, which is somewhat in line with their own 5-year average, though it's lower than that. Their 5-year average is hovering more so close to 13.2. And what's noticeable is that their forward price to earnings ratio is also less than that of the industrials average, which suggests that this stock is lower valued in comparison to the sector, or it could suggest that the stock is actually quite reasonably valued. Looking at their own price range in the past 1 year, their last trading price of $230.20 is hovering closer to their 52-week high price of $245.33. The lowest that this stock had hit in the past 1 year was at $185.89. We're going to take a look at a number of additional financial metrics. The first one being earnings per share. It's always an important one. And here we're looking at the adjusted earnings, which allows us to see how the business is able to earn for one share that they have. In the next 12 months, they're estimated to have $20 in earnings per share, which is the highest they've had in the past 10 years. It's actually a huge 32% upside compared to their last period. In the last 12 months, they had $15.20 in earnings per share. And if you look at it, other than 2012, 2013, 2016, and 2020, where they had a decline in their earnings per share, the rest of the years, in the past 10 years, their earnings per share had an increase. There was also 1 year in 2015 that their earnings per share stayed stagnant and flat. As for the total sales or revenue, they are overall showing an upside trend with the last 12 months. They having $24.8 billion in total sales. As for outstanding shares, ideally, we would like to see a business that buys back its shares and gives more value to its investors. And that's the case. In the last 12 months, we are seeing 143 million in outstanding shares, which is less than any of the numbers in the past 10 years. Looking at the stock price return for Cummins, which is traded on New York Stock Exchange with ticker symbol CMI. The year-to-date return is up by 4.8%. The one-year return is down by about 1.5%. The five-year return for the stock is up by a cumulative of 51.4%. If you look at the 10-year return, it's up by close to 130%. And if you look at the longer term horizon time frame, almost actually 30-year time frame, the stock is up by 2,670%. It's just incredible return. Our second pick is a company in healthcare. It's no other than Medtronic. It has a dividend yield of 2.86% and a dividend safety score of 99, marking it a very safe dividend payer. It last increased its dividend back in May of 2022, where they increased it by 7.9%, or an average dividend growth there. From a volatility perspective, Medtronic has a beta score of 0.61, suggesting a low volatility for this stock. Medtronic has a market cap of $126 billion, making it a mega cap size business. This business develops, manufactures, and sells device-based medical therapies to healthcare systems, physicians, clinicians, and patients worldwide. Their business actually was founded in 1949 and is headquartered in Dublin, Ireland. Looking at their payout ratio for their dividends, we're looking at the current payout ratio of 45% and a forward payout ratio of 49%. Both of them are considered low for most companies, and it's positive to see there. In terms of their dividend growth history, in the past 5 years, they increased it by average of 8% per year, and in the past 20 years, they increased it by average of 13% per year, which is a very fast dividend growth history in that 20-year time horizon. As for their dividend payment history, you notice that Medtronic has been paying its dividend uninterrupted for the past 44 years, and in all of those years, they have increased it year after year. In other words, they are just shy of about a few years to hit that dividend king status, which is just a wonderful recognition for companies that have been paying and increasing their dividend for 50 years straight. As for their annual payout in terms of their dividend, they have an annual payout of $2.72, and they're paying their dividend on a quarterly basis in the months of January, April, July, and October. Looking at the timeliness of Medtronic stock, their dividend yield is 31% above their own 5-year average, suggesting the stock may be undervalued. And in fact, if we look at their forward price to earnings ratio of 17.1, it is less than their own 5-year average, both of which again pointing to the fact that the stock may be undervalued. What's more, their last trading price at the time of making this video is hovering very close to their 52-week low price and a lot less than that of their 52-week high, suggesting it might be a good time for dividend investors to consider this stock added to their portfolio. As for their earnings per share, despite the fact that in 2020 and 2021, they had a decline and also estimated to have a 1% decline in the next 12 months, for the rest of the years, their earnings per share has been increasing compared to the previous years. A similar story for their total sales, that they have actually done quite well, with the only exception being in 2020, where their sales went down by 5%. Other than that, for the rest of the years, they have shown an upward trend in terms of growing their total revenue, and in the last 12 months, showing $31.7 billion in total sales. As for outstanding shares, we are not seeing that story of the share buyback. In fact, the company has been issuing some shares. In the last 12 months, they are showing 1.35 billion outstanding shares. Although it is higher than what they had 10 years ago back in 2013, it is showing a downward trend since 2016, and they've been able to buy back their shares since then. If you look at the stock return for Medtronic, which is available with ticker symbol MDT on New York Stock Exchange, year to date, the stock is down by about 10%. 1 year return showing to be down by close to 26%. However, if you look at the 5-year time frame, you're looking at a return of a positive 14%. The stock has not been around for that long. So, in fact, if we zoom out, we see that it was listed on the New York Stock Exchange since 2015, and since then the stock is showing a cumulative return of about 28%. That's in about that 7 years or so time frame. There you have it, folks. A quick look into 2 high-quality dividend-paying stocks that are perfect for dividend investors to consider to buy or add to their watch list at this time. Are you invested in any of these stocks? What and which dividend stocks are you adding to your portfolio? Let us know in the comment section down below. As always, if you enjoyed this video and gained something of value from it, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks. We also talk about investing in crypto and ways to reach financial freedom. Thank you, and I hope to see you next time.